Hey guys, it's Dan. You're watching IAllegedly, and I have got a good one for you today because we're going to talk real estate, and I have got Scott Walters Realtor here, and I have the one and only Economic Ninja. So we're going to talk about real estate.
It's my line.
And it is your line, okay?
I just love messing with
But a couple things before we get into it. First, please take a second. Please hit the like button. Please hit the subscribe button. Join the email list below. And also, I have a Patreon channel. And also, check out the link below for foreclosure.com. If you guys want to look at foreclosures, you guys want to look at short sales, you want to look at bankruptcy sales, use the link below. They'll give you a 7-day trial for free. Check it out. Now, guys, real estate, okay? Yes. I want to talk to you about, in the last year, okay, the average house payment went from $1,624 up to $2,542, okay? What do you guys think about that alone, okay? Now, we're in a market here that's insane, but do you guys think that the average person can still afford real estate right now?
You go first. Okay. I'd say it was fine if gas wasn't going up, electricity wasn't going up, the cost of borrowing wasn't going up. I mean, it is a big number, but the problem is everything's going up. What do you think?
So, yeah, no, I mean, it sounds like based on the national averages, that's the payment was around $1,600 a month. Now it's at what?
It's at $2,542.
Due to basically the cost of money doubling. So they're clearly, the federal government's trying to curb inflation. They're going to cool off these markets whether we like it or not, and it's playing out in front of us. So now it's not really so much if it's going to cool off. It's here, and then it's really by how much is it going to cool.
The average house around the country finally hit about a month and a half ago $500,000. Now, we live in Southern California, California, which we haven't seen a $500,000 house. I mean, for a $500,000 house, I mean, there's some inland areas in Central California.
Yeah.
I just don't know where you find a $500,000 house in our areas.
I don't want to tell everyone, they'll buy them all.
Well, like where we're standing today.
Yeah. Oprah's backyard, score.
Yeah, the average sale price is 1.5, right?
Yeah.
So, pre-pandemic median home price was maybe just under $1 million. So now, if you want to buy $1 million home here, you're getting nothing. And then, and basically, if you were pre-qualified for a loan for up to $1 million, and you didn't, and you're now maybe $500,000 is all you can now spend. Your purchasing power has been removed. But the good news is, in my opinion, thank your lucky stars that maybe you got priced out and forced onto the sidelines, because I think the safest place to be right now is, in fact, on the sidelines.
So, that's completely, that's a great point. Frustrated buyers are a huge population right now as far as potential real estate purchasers, right? They're on the sidelines, they're frustrated. What you need to understand too is it's your choice to buy a house at these insane prices and these insane mortgage rates. It is your choice to have fear, uncertainty, and doubt, FUD, overtake you and buy a house, right? But what's crazy that blows me away is that people don't realize that this happens every 7 to 10 years. The real estate markets fluctuate. Now, we did see the Great Recession where we saw in my town, in California, 40% loss in home prices. But here's the crazy thing. That didn't happen back then in Texas. It was a little bit less. It was like 5 to 10, right? It didn't happen in Idaho. It was, maybe 10 to 12. Here's the problem. California, New York, and a bunch of other people that had a bunch of money, more money than they had sense, ran out and didn't only go buy cash over there, they leveraged money. So people took their nest egg here from California, New York, and other rich places, they went out to the Midwest, and they still borrowed money. I just got back from Texas, and every home that was being built over $3 million were from people that literally had big bucks, but they still leverage that. So we're going to see this crash not only in California, not only in Las Vegas and those places. We're going to see it in Idaho. We're going to see it in Texas.
Right. One thing I was floored about was when I went to Texas last summer, I was floored at the housing tracts that were built with smaller yards. I always envisioned Texas as acreage. Yeah. I always envisioned, I didn't see tracts of houses in my head, and then when I went there, I'm like, well, these houses are on top of each other. It's like a Southern California market. So
because it was in a boom.
But again, the next question is, home builders, do you think we're going to see tracts of houses that are not going to get completed like we saw last time? That are going to be mid-stage.
Oh, so excited. So I own a construction company. I have an engineer. We have our engineering general contractors and engineering license, and I could tell you for certain. First off, real estate and construction, they are not correlated completely. Totally. Construction is what's called a lagging indicator. You see, contractors wake up every day and they just build things, they do things, right? But they don't really start to expand until all their contractor buddies are starting to expand, and they go, what are you doing? Like, I'm building a tract of homes where you used to just build one. Well, why would you do that? Because I'm making money. And he goes, well, maybe I should do it. And by the time most of the contractors or the construction companies dive in and they start going for these big tracts of homes, it's too late. Construction, just, we're not in a housing deficit. The only thing that's different from this time since 2006, 2008 is Airbnbs. Airbnbs and VRBOs took a ton of inventory off the market where people literally said, I'm going to buy a house and turn it into a hotel. Yeah, that's about the dumbest idea ever, because when this bubble pops, you're not going to have that vacation.
But you're also, people are not going to go. Well, that's the thing. More people, it's funny you'd say that. This week I had 4 or 5 people write me and say, Dan, you're right. We're not doing the vacation this year. We're going to do a staycation. We're going to spend money here. We're not going to spend money on gas. We're not going to go rent a hotel room. Yeah. So, the Airbnbs, I think that they're doomed, because more and more cities are changing that. But do you think that you're going to see the builders not complete homes? You think that's going to happen?
Oh, absolutely, 100%. I mean, mathematically, it's impossible, because there's a lot of developments that did, in fact, finish all phase work and was able to maybe get them delivered. The challenge with those neighborhoods, in my opinion, my humble opinion, is those are all people that bought at the height of the biggest real estate bubble ever produced. Every single owner just bought those homes. So I think they're very exposed. I don't like that. I don't want people exposed. I want people to be protected. So second is, there is a lot of developers that bought land. Let's say you're outside of LA, and so you built these houses that are 2 hours from downtown, with people thinking they could telecommute and save a couple $100,000 on their house. And so these people there's a lot of developments out there that are stuck in production. They're unfinished in a rising interest rate environment.
Also, they have problems getting the supplies, getting everything from appliances to garage doors to flashing.
Workers to show up.
I spoke to a roofer who said that they can't get flashing right now, which is insane. That you're not going to build houses with that.
Well, let me say this. Actually, I've already heard of stories, and you touched on it. I don't know if you said it completely, but we're already seeing, when you buy a home, brand new home, you go to a developer, a builder, you say, I want to put some money down. They say, yeah, here's a $10,000 non-refundable deposit if you go after a certain date, and they start building the home. The reason why they have to lock that in is because they can't unlock a certain amount. Let's say they're doing a track of 100 homes. They only can get the money for the first 20, right? But then they've got to show the bank that they've got 20 of them locked up with deposits, non-refundable. Then they can get the money for the dirt work on the next 20, right? So that's why they do phases. I want people to understand how phases work. And a lot of people like me used to get into phase 1 or 2, and then I would flip that house by phase 4 or 5, right? It was a great way to make money in a good time. Here's the problem. With an interest rate, this is skyrocketing. This is 2006 on cocaine. What's happening is, you as the buyer, you lock in your house price, you get to give them $10,000 non-refundable deposit, but you don't get to lock in your loan. See, that house is going to take 6 to 8 months to build. So you actually can't go get a mortgage locked in a rate until you're about 30 to 60 days out.
Right.
So they're walking away like crazy right now.
Now we're seeing,
and you're going to see that in the next
here's the
60
sick
days.
thing. We're seeing more people write me and tell me that they can't afford the house that they purchased a year ago. And the house is 6 months behind, and they're having that problem. The other thing is that in Texas, I don't know what the contracts are in Texas, but they're canceling people's houses. Houses were a year late, and they're canceling the contract and then relisting the houses for $300,000 more, which is criminal. And I've shared some stories over the last week with that too. So that's awful too. And
you can hold the builder's feet to the fire though with that a lot of times.
But again, the average person, a lot of people are house poor. You always talk about this, about how they get overextended, they move into a house and they're super overextended and they're running into these problems. But we're seeing that here, we're seeing it in Australia, but these adjustable mortgages. We talked a little bit before we got on camera about these loans. I mean, the thing that I remember was Countrywide had pick a payment.
Yeah.
And we talked about that, where you could, make whatever you want. And again, the average person is I'm not going to make the 15-year payment. I'm going to make the lowest payment I can.
I did those with all my flipping homes, because I knew they were immediately going on the market. I did
minimum amounts down.
Yeah.
No skin in the game.
Explain negative amortization just for real.
Negative amortization, when you pick a payment option, there's 3 different payment options. It's fully amortized, it's interest only, or then there's what it is there's a negative amortization rate where the principal goes on to the back side. You could actually do 3 different payment options, and that was the one I would do, and I would pay the lowest amount, but then my principal would get stacked onto the back end. It was a really interesting thing. It's coming back. But if you don't mind, I gotta say something about these builders, because this is a big thing that people need to understand.
Yeah.
There's a good builder will have a clause in their contract that says if a certain percentage of inflation, a threshold is met, or certain items are not able to be purchased, because right now with most lenders, you can't, if you don't have carpet in the house or a finished concrete or appliances, certain appliances, you literally cannot sell the house to the buyer.
Yeah,
right?
some areas it's window coverings. And when
Exactly.
I bought a house 20 some years ago, and they're like, you have no window coverings, and it says that in the contract. And they put window coverings in the house to close escrow on the house.
So what I would do personally, if a builder says, sorry, we hit that clause, and you watch them, you keep all your documents, and you immediately turn them into the Better Business Bureau, you say, you better not go sell that house to somebody else, because if they go sell that house for a profit, and they're claiming, oh, it's because we couldn't get a product, because there's some shady builders out there, and then they turn around within a year and they sell it for a profit, you got them. Because if you did everything in your power to close that loan, you had the loan stuff going, you had your deposit in, all this kind of stuff, don't let them get away with that. This is like letting the banks get away with taking your home in 2010, which was completely criminal. And I want you to understand this. Nobody I know, there was no such thing as a sheriff coming to someone's door and evicting them. That's why banks gave you cash for keys, because they gave you an illegal loan, they forced PMI on you, they took the PMI, then they took your house and sold it, and they got to loan it out at 9 times that value.
You brought up a great point, cash for keys, okay? Scott brought up something on his channel a few months ago that I called him about after I saw the video, and that was never in our history, the history of our country, or basically around the world, did you have a time where people were not held responsible to make their house payment and were not kicked out when that didn't happen. So during the health crisis, these people could not make their payments, they got forbearance, they didn't have to worry about making the house payment, and had no repercussions, were not evicted from the house. Now, that's starting to get caught up. Foreclosures are running, there's more foreclosures now than in 2019. There's more filed right now. More people in pre-foreclosure, which is at least 3 months behind on their house payment. And we're seeing more and more of this on basically a weekly basis right now, because people are overextended. People have also borrowed more against these houses and used the house as ATMs.
Here's the scary part for me personally. Now, like you said, this was the first time in history we ever saw a foreclosure ban. You cannot foreclose. And the reason they did foreclosure bans, because let's say I own a rental and you're my tenant.
Yeah.
Well, you don't have to pay rent. Well, hey, my tenant doesn't want to pay rent. No problem, sir. You don't have to pay your mortgage. Oh, okay, that's fine then. So then what people were doing, of course, so if I don't have, I could just call the bank, hey, can you put me in this forbearance? And they're like, sure, whether I had a tenant or not, just for my primary home. And then I poured it into the crypto market. Instead of making my payment, the money I saved,
Speculated, yeah.
I rolled it, and that was this whole buy the dip thing. And for me, I just was like, wait a minute, maybe we should kind of wait and to see how this one plays out. One hiccup in the economy or our income could throw us into a tailspin, and you're dragging a depreciated asset along for the ride until ultimately you give it back to the bank. I want to protect anybody watching today. Please understand that this was complete market manipulation, euphoria, and now we're gonna see how this one shakes out. And that's why channels like the Ninja, IAllegedly, hopefully over here, we're letting you know, listen, real estate's designed to be held, not flipped, speculated, and while there's a lot of money to be made, there's a lot of money to lose as well.
Scott Walters Realtor USA is his channel, and of course the Economic Ninja. Again, where do you think loans are going to go right now? Do you think that the fixed rate mortgages, talking to somebody at Bank of America the other day and having them say, oh sir, the advertised rates in the door, those aren't for everybody. That's not, you've got to have collateral, you've got to have a good job. We're writing mortgages in the 7% range now, which guys, if you have a $250,000 loan, that's one thing, okay? But when you have an $800,000 loan, like the average loan here is in California, it is insane, the numbers that people are paying for their mortgages. And Scott always uses a rule. What can you rent the house that you're living in for? Make
sure your mortgage payment is under the property's rent range. And most of us don't know what our house is going to be renting for. We don't care. We just want the house. We should always check the property's rent range and tell our agent or lender, listen, make sure my payment is in or around the property's rent range in case, Lord forbid, the economy gets overheated with stimulus or some craziness.
Well, remember, anybody buying a house at these prices and these inflated interest rates are buying out of greed. I want you to understand that very clearly, okay? So people are like, I can't believe you get excited about people losing their houses. People that bought foolishly bought because of greed. Why? Because they said, if I don't do it now, I'll never be able to get in. And the only reason you want to get in as opposed to renting is because you want to make money. There's nobody that sits there and goes, no, I just want to have a place that my family is comfortable and we can have Christmas at the same time every year. And you go, no, you could do that at a rental with a proper lease and be paying a lot less and have a comfortable lifestyle. It's greed that flows all of us into doing a lot of things, quite frankly. I've been accused of it too. I mean,
I got to jump in. This is a hot one.
Yeah.
So I always say be less concerned about owning your house, more concerned about owning other people's houses. So many people put all this pressure to own the house. Guess what happens the second I sell you a house? It becomes all about the house. You're tied to this house. You have no time to go invest because it's all about the house. You have to make that mind sacrifice now to benefit later. If that's what it takes, be willing to live in a shoebox, a park bench, whatever
a duplex,
it takes.
Anything.
You know what? It's funny that we
Live in
talked
an
about
apartment.
that because my kids are adults now, and I could pretty much live anywhere. And I would love a fourplex. I would love two things. I would love a fourplex, live in one of the units. That would be awesome. And I'd also like a cabin with a pond on it.
Gotcha.
Yeah, exactly. You need a real estate agent in California. You're gonna have to call the
But
guy.
that's the other thing, guys.
Man.
If you guys are thinking of buying or selling around the country, Scott Walters Realtor has the largest network of professionals around the country that you should look at. I'll make sure the link is below on that. But this is crazy. In one other thing, my girlfriend rents a house for $3,200 a month. Nice little house. The people next door bought the house, and we had to find out what the payment was because they paid just not here, they paid to here on the house price. And their payment's $4,500 more than her rent
That's
is.
the greed.
Okay, $4,500 more. And we're just like, she didn't believe me until I showed it to her because that's insane. But again, not that my girlfriend got a smoking deal. She paid market rate for the house, nice neighborhood, but these people are insane to pay for that and are gonna regret that purchase someday. So, again, what do you guys see for, let's end it with financing. What do you guys think financing is going to go for home mortgages? You think that we're going to see a lot more adjustables and HELOCs and things like that pushed on? By the way, the HELOCs are the lines of credit that people get for houses. Do you think we're going to see more of that?
Lines of credit, I think, are going to shrink because banks are already pricing in risk. They already understand that this is fake. They already know where it's going, right? These guys were in business back in 2008. Interest rates are going to keep increasing, which means you're going to see much more fancy loans, the ARMs and things like that. But what's really interesting, I think it's very important, is what's simply happening is banks are just opening their margins up by firing people. And so because loans are getting so scarce. I mean, it's so hard to find loans, right?
Yeah. And the one last thing, do you want to add something? Or the one last thing is predatory lending. And that's the one thing, if you need to borrow money, there's people out there that are going to lend you money, but you're going to pay higher interest rates, higher fees. You could get money fast from these people, but man, it is bad. I mean, we talked a little bit before about the reverse mortgages that people are trying to do. And again, guys, research anything that you do. That's the one thing that we always say is, I'm not giving you financial advice, but get somebody who's been through all this before. Somebody like Scott who's been through, several wars and seen everything. That's important that you guys get someone like that can advise you on which way you should go.
Scott, tell them what they should say or do when a real estate agent or a lender says, you better lock in this rate now or put this offer in now because you may lose this opportunity.
Find a new agent. And that's actually the truth. I mean, the reality is, friends, is that it doesn't take a rocket scientist to figure this one out. Most people, when we're buying a home, we trust the real estate industry to take care of us, right? We're in the hands of a real estate professional and then ultimately the lender. All you know is, I want this house. And so the reality is that when most people just have no idea about what they call in the industry loan products, different loans. Their job is, let's see how we can fit this person into this loan. We can't get them into the 30-year fixed. And you trust them. They're like, hey, listen, we got this ARM. It's an adjustable rate, and we're going to lock in a rate for X amount of time. And as long as you refi before that, you'll be fine. Go ahead and sign here, and we'll get you back to Scott so he can get you the keys to that new house. So we trust the industry to take care of us. So be very, like Dan said, get with an agent you trust that's going to put your needs before their own. It's going to be hard. They're out there. I'll get you together with one if needed. But right now, my advice is to buckle up, strap in, stay on the sidelines, stack cash, do whatever you can. Stay close to these guys, smart guys. They're going to always help you.
But the final thing is, people say, well, should I sell, Dan? Should I not? Well, when did you buy the house? You know, what's your payment like? What's the situation like with your income? Is this your forever home, and can you afford it, or did you just buy within the last 18 months and you saw superficial run-ups? I mean, that's my thinking, is that people have overextended themselves and are kidding themselves that their house is never going to go down in value, and they're going to go down in value, you know?
Couldn't agree more.
Okay.
Yep.
Well, guys, again, please don't forget to the like button. Please don't forget to go to the Economic Ninja, Scott Walters Realtor. Okay. And also, guys, these guys are so much taller than me. I've walked so much further. Look at this. Okay.
I'm shorty.
Yeah.
He's the taller
Yeah.
one.
These guys are so tall. Anyways, don't
but you're
forget,
good looking. You got
if
great
you
hair.
guys are interested
great
in
hair.
thank you very much.
no
Thank you.
problem.
If you guys have, if you guys are interested in foreclosures, take a look at the link for foreclosure.com. You can get a week for free. Onward and upward, guys. I will see you guys very soon.
See you guys.
Economic Ninja.
You'll get there. You'll get there.